Hello, everybody. This is your cousin Leon Hawkeye Howard, and I'm bringing you another video. And this week's video, we're going to talk about some stocks that you may be interested in purchasing for yourself. And I'm going to recommend that as a beginning trader or any type of trader, you first look at stocks that may interest you from companies that you may be buying a lot of or interested in their particular product line. So we're going to talk about that. And we're going to talk about, of course, how to trade yourself. There are a lot of companies out there that will take your money and you invest with them and you'll get a return on your investment. But if they go out of business or something goes wrong, you still won't know what's going on or what happened. So my saying is, you can buy a person a fish and they'll eat for a day. Or you can teach a person how to fish and they'll eat for a lifetime. Not only will they eat for a lifetime, their kids will eat for a lifetime and their children's children will eat for a lifetime. So that's what we're going to be talking about today. Of course, teaching you how to do it, what to look for, and how to get started on certain stocks that you may have an interest in. So without further ado, let's go to a chart and take a look at this particular chart. Let me move myself down here, out of your way. This chart, as you see, is called SNDL, and that stands for Sundial Growers. Sundial Growers produces marijuana, cannabis, herb, as we like to say. So this is a marijuana company. And we all know that as marijuana becomes legal in more and more states, the price of it will more than likely go up. Now remember, this is not financial advice. I'm not recommending any stocks. I'm not your financial advisor. This is for educational purposes only. But I want to show you how it works. This particular marijuana stock, Sundial, about a year ago was way up at almost $4 a share. Since then, it has dropped down to where we are today. This is a weekly chart. So every bar is 1 week of activity. So it's way down here at, look up here, 51 cents a share. Anybody have 51 cents in their pocket? Okay, if you do, that's the cost of this stock at the moment per share. Now, when you see a chart that looks like this, I always believe in visuals. So by looking at a chart, when you see it looking like this, it's going sideways, very low. It's called accumulation. That means that the banks, the hedge companies, the insurance companies, and investors like myself are accumulating as many shares as we deem that we want because the price is so low. Remember, what we want to do is buy low and sell high. So the price is low, we're accumulating because we know with patience at this time, we accumulate this many stocks or this many shares, and very soon, we hope it's going to start going back up. So by buying what's comfortable for you, and let's just say in the 50 cents to $1 range, if it shoots back up to $4 a share, you have doubled, tripled, quadrupled your money or your investment. And that's how money is made. So you're buying low and you just have to have patience. You're buying in here, you may buy a little bit every week, you may buy a little bit every month, whatever suits your budget, and just waiting for the time, because whatever goes up will come down and whatever comes down will eventually go back up. So that's the strategy for this particular play, is accumulate as many shares as is comfortable for each individual or each company, and then wait for the time that it goes back up to make your money. So let's go to another example. Let's look at LUV. Now, LUV stands for Southwest Airlines. Many of us fly Southwest Airlines. And as the economy hopefully starts to come back and people start to fly again, we're hoping that this particular stock will start to rise. As you can see, back around a year ago, it was up around $65 a share, $64.75. Again, it dropped. This is when you want to start taking a look again. Now it's down to $45 a share. So it's gone from 65 to 45. So it's low. We don't know, it could go lower. But what I'll do with this particular stock is put an alert right here. Now this stock, if it reaches $47.66, so let's just say between $47 and $48, hits my alert. My phone will alert me, so will my computer, and it will let me know that this stock is starting to rise. I can take a look at it, make a decision, and decide whether or not I want to put in an order to buy some shares of this stock. So right now, again, we're at patience. I'm just waiting. I'm just going to wait to see what happens, not doing anything. Okay, so that's another perfect example. Again, this is a weekly chart, and each bar is 1 week of activity. So let's wait and see what happens next week. Let me give you another example. Let's talk about AMC. A lot of people have talked about AMC. AMC last year went as high as $72 per share. Some people bought way up there. Now they're hurting because it dropped so low. But now that it's down to only $17 per share, it could go lower, but maybe not. This may be a time to start accumulating more shares. I bought back up in the $30 and $40 range, and I'm still holding those shares. And I'm buying more shares now that is in this range of in the teens, $17 to $20 a share. So now I can also put an alert, or those of you that don't want to buy at all yet, you just want to watch it. You can put an alert right here at $21, let's just say. Put your alert right there, so if it dings and starts to go back up higher, you can take a look. So all of my trades are meant to be easy, something you don't have to watch every day unless you want to, something where you can put an alert in and it will tell you when it's time to buy. So that's how we're doing, and that's what we're looking at with AMC. Remember, I'm not your financial advisor. I'm not telling you to buy AMC. I'm just saying we're watching it to see what's going to happen. Now, let me give you one last example. Now, here's a stock called LXU. It's an agricultural stock, and I just happened to buy this stock. I saw it trending up last week. I bought it at $13.46 a share. Already it's up to $15.90 per share. I have what's called a stop loss right here. So if it reverses on me and starts coming back down, my stop loss is placed at $11.38. So I will only lose about $2 per share. So my stop loss is right there, protecting me, protecting my investment. But if it keeps going up, my take profit, initial take profit area is going to be around here, the $20 to $22 range. If it hits this area, I will make a decision as to whether or not I want to sell those shares, put the profits in my pocket, or if I want to sell some of the shares and keep some of the shares to see if they go higher. All the decisions can be made there. But right now, I'm in profit. My money is up, and I'm protected with only a loss of $2 per share if it reverses on me right away. So now this is what you would call an immediate play, something that I'm making money with right now. Those other plays I showed you are long-term. You're just waiting to see what happens. So during the course of a week, I will buy certain stocks for immediate money, immediate income, and other plays I will put in an alert to just wait to see what happens down the road. The choice is yours. You can do whatever you would like to do. But I just want to show you that you can do either way, either or. Wait for some stocks, buy some stocks immediately. It's up to you. So that is pretty much my presentation and talk for today. Share, like, tell other people about these videos. And if you have any questions or any comments, please place the comments in the comment section, and I will try to answer them or make a video based on your questions or your comments. So thank you so much for watching. Have a great day, and I will talk to you soon.